Turning our attention now to the livestock sector. For the first time, we had the chance to bring Brad Kooima onto the program. Brad is part of Kooima Varilek out of Sioux Center, Iowa. We discussed the short-term and the long-term factors that are impacting the cattle trade, but began the conversation by having him introduce himself.
Well, thanks for having me on, Bryce. I'd be glad to. Brad Kooima. I'm a broker here with our firm, Kooima Varilek Trading up here in Sioux Center, Iowa. I've been a commodity futures broker since 1980. I also am a farmer feeder. That's my start. I've been a cattle feeder since 74 and a broker since 80, which I don't know that makes me any smarter, but it does give me a little bit of life experience in both the markets in an in-depth way. And I can also say that I do indeed have some manure on my boots as well. So I do get the feeding market, or the feeding part of this thing is obviously I've had some practical experience with that as well, Bryce.
We have unique perspectives. I appreciate you coming here on the program. As we jump into the conversation, Brad, we had a cattle on feed report released. Were there any surprises that stuck out for you from that report?
No, there wasn't. And you know, the broker part of me is always kind of relieved when you have a neutral report. And that really was. All the categories were very, very close to what the trade guesses were. The one thing, of course, the takeaway on the report is that's a big number of cattle on feed historically, one of the biggest ever. Now, to put that in perspective a little bit, Bryce, some of the reason that we've got a lot of cattle on feed is because we've placed cattle at a lighter, younger age. And that's, of course, because largely because of the weather. Drought conditions, particularly in the wheat pasture this winter, really eliminated the idea of hardly any cattle going out to graze out wheat pasture. So they immediately went to a feed yard. So I think it's a little bit of a misconception to worry necessarily about the large number on feed because they're going to be on feed longer because they're lighter cattle. It's just what it is.
Brad, as we look to the short term of this cattle market, cattle don't like uncertainty. The traders, the cattle traders, that is, don't like that uncertainty. What is your outlook here in the short term for this cattle market?
Well, unfortunately, you make a very good point there, Bryce, about cattle hating uncertainty. And I think that's one thing that I've learned over the years. It's almost like, being at SeaWorld, right? If you sit in the first two rows, you're going to get wet. Cattle market seems to have that exposure to, what they call lately black swan events, but we've certainly had our share of that. And the problem is, I think you're talking about what happens is that the long speculator who's involved with cattle, that they feel that beef is still something that is a bit of a elastic demand thing. If people decide to try to save money or something like that, things will change it. That's just what it is historically. It seems like the cattle have a tendency to follow the stock market more than any of the other ags do. So in the short term, though, to talk about what you've asked about, clearly Russia-Ukraine issue has been the market issue here the last several days. And it speaks particularly, of course, to the grains. But there's an ancillary effect on the cattle because of that. So you've steeply increased the cost of gain here in the last week and a half. What that does then, of course, is that it has a tendency to incentivize anybody that's got cattle that are fat to get rid of them, right? They don't want to feed any more of this expensive feed. Now, granted, we are getting $1.42, $3, $4 for these cattle this week. And I don't know that your cost of gain is quite that high, but still, it just is what it is. And you've seen that the last 2 days, particularly in the futures trade price, where April has been quite a bit softer relative to the back months. And I think that's a market that's anticipating a little extra tonnage in the short term and a little less in the long term. Now, having said that, that's a little negative right in the here and now, but that actually is kind of supportive down the road as you're pulling some cattle ahead now that would have been maybe, for instance, April cattle that we're now killing now in the early part of March. So that would be one of the short-term issues with the market, I think. Now, I don't want to be misunderstood. I'm really not super negative here at all. April cattle just broke $8. We're trading at a discount to cash. If we can clear up this uncertainty with the Russia-Ukraine thing, I would say it's a pretty good likelihood that we could see a pretty quick recovery here on the front end of the market, even in the short term, Bryce.
Brad, that's the short term, and you're kind of alluding to the long term. You're still bullish. How far out do you go with your bullish outlook?
Well, we don't have all day to do this, but I'll try to be brief. Last year's cow kill, we've had 3 big cow kill years in a row. Last year's cow kill was the second biggest in the last 20, second only to 2011. Of course, in 11 and 12, we had back-to-back droughts, and we really liquidated the cow herd. That's after, of course, we had September 11, had mad cow disease, similar to what we've got now, right? Where we had the Holcomb fire, we had COVID, and now we've had drought liquidation. So, but just a little reminder, it took until 2014 for us to really, the dog to run to the end of his chain, right? For that leash to get tight in the market to finally do what we wanted all to do. So I feel like sometime in the next year and a half, year and 3/4, assuming it rains, let's hope these guys with the cow-calf pastures that they get rain this spring. If they have the ability to hold back those females and turn those heifer calves into cows instead of us having to feed them again, I can see a year from now, if we do this again, we could be talking about some really fun levels to be at.
Brad, I appreciate you coming on Market Journal and share your perspective.
Very welcome. Anytime, sir.